Hello there, this is Imi from iTradeAIMS.com. I don't know why I have to say that. Just a quick look at DAX. I have this daily chart open and it gives me a few ideas. So we see 3 up with a divergence. So a completely 3 up. And if this is considered as a 3 up, then the move back to the purple would be the 4 down based on this. And even the 4 down has 2 peaks, so that shows a zigzag 4. That would make this the A down, B up, and C down. I accept that as C down, although this C is not made of 5 waves. It looks like it's made of ABC. This also happens. Of course, we don't know if this truly is a wave 5 unless and until it breaks above the high of this 3. So far, these waves that began with this beautiful, almost an apple, but a fruit, long signal at the peak of wave 4 into the next wave 5. If you were long in this, you would have an entry here and another one here. And now it's pulling back. But the gator is open and there's a fresh cross. You wouldn't necessarily be looking to exit this trade because you can see the structure. You can see a 3 up, a 4 down. So you need to allow this trade to grow into a proper wave 5. And when it enters this zone, the target zone 1, that's when you will be looking for exit. Now I know this has moved in an impulse fashion up, but it's not enough profit to get out of this trade so early. If you can see the 3 like this, if it can do this, can we assume that it will do this again? Especially because we already know that the market moves in these waves, 3, 4, 5. And it often hits the target zone 1. In fact, when a wave becomes a wave 5, 80% of the time it will end between target zone 1 and target zone 2. So if you took this trade here and added on here, you are really looking forward to letting it run, letting this gator open up, price goes up. So probably a few weeks, maybe even 6 to 7 weeks, like in this case. See here we had a fruit, and then you have a long here, and another long above this, and then you probably added here, if you added the 4th time, or maybe you just allowed these 3 entries to grow and exited when you had this lovely angle format, as you can see. Let me see if I can draw. Where are my arrows? There. So you have, so you can see that market is going pretty normal angle, the gator and price, and then in the end, at it's about to diverge here, it kind of creates this rubber band principle move. It moved very strongly compared to the previous, and that's where it created that angle. And you had divergence, and on top of that, then you received um, this lovely and engulfing candle type of fruit. So you would have gone short here, but you would know that because this is 3 up, even though this is a very strong signal, it's very good for exit out of those trades here. But at the same time, it was a good trade to go short, but probably I won't take it because I can clearly see that this is going into a wave 4. So although it served a purpose for a good exit signal, but not necessarily a good entry signal, because you don't want to go and trade into the wave 4, sorry. So even though if you went there, you would have exited somewhere here and it wouldn't be a loss. So you would do nothing around this area. You probably could have gone long on this, but as you can see, there's no angle. There's nothing different has happened. Let me draw a box. So as you can see in this box, nothing significant has happened. So even though you have this apple here, it didn't really break anything to the left. It was still inside the box, so it was nothing significant. There was no angle, so you wouldn't take this. But then when this happened, this had many good things in its favor. One, it was a fake out of this ranged wave 4, range bound market wave 4. Plus it was at the end of this zigzag, which is a trademark of ABC zigzag wave 4s. And another great thing was that this fruit appeared at the start of the month, which also was the start of the year. This is the structure of the market. Moves at the start of the week, start of the month, start of the session, start of the hours tend to be stronger. And that's where the direction is set. It's just the internal structure of the market. So from all this discussion, we can assume that basically it might be a good time to predict that this price might come back and hit these levels or greater, that it is a good time for a pullback. But is it a good time to actually assume that we can take this fruit for a possible move down? Probably not. We can then further question this and research it by going to the higher time frames. So let's suppose we go to the So now let's do some analysis on the weekly chart. We see a 3 up followed by a 4 down with a nice apple, which didn't have any significant angle, but it did mark the start of the next wave 5 up and marked the end of the 4 down. This is the 4 down, right? Yes. So I can see even on this daily chart, the wave, I can draw my target zone, mark it here. I can even draw it from here or here. It shows me that there's a possibility of price going to this level here, all the way to 14,000, 14,200 around that area and beyond, because wave 5 doesn't just end at target zone 1. It ends inside target zone 1, which is Fib expansion 61.8, and target zone 2, FE 100. This basically means that when you have a 3 wave of a certain degree, and if it pulls back up to the maximum of 50%, which is the purple line, then the next impending 5th wave would move around 62% to 100% of the length or the amount of digits or numbers or pips or points of difference between the price. So from this point to this point. So if this was 10 points move up and this move down was no more than 5, but anything between 3 to 5 points down, then the next move up, starting from here, would most probably be around 62% of this move, which makes it, if this was 10, then this might be between 6 points to all the way 10 points. Now, if the 5th wave moves 10 points or as much as the 3rd wave, chances are that the 5th wave will turn into a new wave 3. And it keeps going on and so forth like this. So on the weekly chart, we see a 3 up, 4 down, and we see probably a 3 of 3 and probably some kind of a 4 down. And although it looks like a B trap, it hasn't touched target zone 1, so it gives me reasons to believe that there might be more longs hiding in there in the future. Well, of course, we will find out. And that then makes this fruit short not a very good signal from the overall perspective. But if you were to take, let's say, stage 1 of fruit signals, where you don't do a lot of analysis, you only do it on your current time frame, and you only want to focus on the entry method. From that point of view, just like you had a great angle here, oh, not this one, rather this one. This also has a great angle. So from that point of view, it's a very good entry. And remember, fruit entry is the test entry. Profits don't depend on the fruit entry. It complements it. It prepares you to get into that trade. And then when you have a confirmation, when price starts to go down, which is about 3 dark boxes, or if you're using the 2-color AO, then it will be red color. Then you add on, and then on the box you add on more. And you're hoping around this time that it turns around this, and then it continues further down. So the gator can open like this. And then you monitor this wave and allow it to run. So for example, if you went long here, what is this? And then you add it on here, and then add it on here. You add on, not there, but rather here, the 3rd green. So you have 2 entries and you let it run and get out here. So that's like 2 months of letting it run and a lot of pips. I hope this video was useful. Thank you.